May 6th, and honestly, I wasn't planning on making a video today. But then AMD reported last night, up 18%. And I started watching the market this morning, and something caught my attention that I think is worth talking about.
Welcome back to Inside Track.
If you're new here, go back and watch the previous videos first. Links are in the description. And subscribe because what's happening right now is exactly what this series has been mapping. So here's what I noticed today. Everything moved up at once. Semis up, gold up, silver up, copper up, Bitcoin up, all on the same day. And I know what you're thinking. AMD had a blowout quarter, of course everything's up. But that's not actually how it normally works. When risk assets rally, when semis are screaming, gold usually sells off. Money rotates out of safe havens into growth. That's been the pattern for years. Today, that's not what the futures are showing. Both moved simultaneously, and that's telling you something. The market is pricing two completely different stories at the same time. Story 1. AI infrastructure demand is real. AMD's data center GPU numbers were exceptional. And this isn't just AMD. Last week, Meta, Microsoft, Alphabet, and Amazon collectively committed over $600 billion in AI capex. That's not a rumor, that's signed contracts. And now it's showing up in actual earnings. Your semiconductor thesis isn't speculation anymore. It's being confirmed quarter by quarter. And the confirmation cycle isn't over. May 10th, TSM monthly revenue. Every AI chip gets manufactured there regardless of who wins the AI race. May 20th, NVDA earnings. Options pricing a 10% move. AMD just told you what the data center demand looks like. May 29th, Avgo. Custom silicon for the two largest AI spenders on the planet. Still modeled like a legacy semi company. That's going to be harder to argue after AMD's quarter. AMD was the opening act. 3 more catalysts to go. Story 2. The monetary debasement story hasn't gone away. Gold and silver holding alongside a risk-on semi-rally means the market hasn't forgotten last week's data. PC at 3.5%. Real income negative. Fed divided. The inflation regime is running underneath everything else, even on a good day for tech. That's the world we're in right now. Hard assets and AI infrastructure running together. It's unusual. It makes sense when you understand the macro backdrop. Now I want to talk about Bitcoin for a second, because something happened this week that I think is underappreciated. Canada just approved its first CAD-backed stablecoin. National Bank, Shopify, Alberta regulated. Live on Ethereum right now. A G7 nation just put its currency on blockchain rails. Not a crypto startup, not a white paper. A major chartered bank and the largest e-commerce platform in Canada. The tokenization infrastructure is being built right now. Not someday, now. And Bitcoin sits above all of it. The only major asset on those rails that isn't backed by someone's debt, isn't yield controlled, isn't tied to any government's balance sheet. That story is getting stronger every week. On copper, up today, and I'm glad to see it. The AI data center demand thesis is real and the supply constraints are real. But I want to be honest about something. Copper wins on demand, not inflation. It's different from gold and silver. Watch the ISM manufacturing number, first Friday of every month. Above 50 copper holds. 2 consecutive months below 50. That's when you start to reassess. Which brings me to Friday. The jobs report drops at 8:30 a.m. ET. And yesterday's JOLTS data, job openings for March, is worth paying attention to before that number lands. The surface looks fine. 6.9 million openings. But underneath, quits are down nearly 300,000 from a year ago. Workers too uncertain to leave their jobs. Layoffs are up over 270,000 year over year. Professional services openings down significantly. Large employer separations rising. That's not a healthy labor market underneath the headline. Friday tells us how much of that stress is showing up in actual payrolls. If the number disappoints, the cracks become visible. If it's strong, the market gets another reprieve. Either way, the hard assets don't care. The Bitcoin thesis doesn't care. Those positions are built for the macro regime, not a single Friday morning data release. The sequence is executing. AI infrastructure confirmed. Hard assets holding. Bitcoin building. The labor market cracking underneath. The tokenization wave arriving. And 3 more semi-catalysts still ahead in May. Follow Inside Track. Subscribe if you haven't already. Video 7 drops when Warsh is confirmed. That's when Phase 2 begins. And that's when the next chapter of everything we've been mapping starts. Don't miss it. Check back soon. The views in this video are my own and for informational purposes only, not financial or investment advice. Always do your own research.